What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll do macro technical analysis and we'll look at weekly charts of all the indices, the VIX and Bitcoin. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up we'll look at the SPX weekly chart. So remember, every single candlestick does represent one entire week's worth of price action, and we can see that we did have another red week, coming back down to the weekly 50 EMA. So we clearly lost the bull trend back here in January, and we can now see prolonged weakness coming into the stock market as we continue to see the SPX trending lower. Now we are at very strong support right around this 4,300 level, but if we lose this support level, we're very likely going to make the next leg lower, which means SPX will start trending back down towards about 4158. And if we lose support at 4158, the next likely support leg lower would be down here right around 4,000. So you have two more critical support levels to pay attention to if we do lose this support level right around 4,300. However, we can't say that 4,300 is not going to hold up until we see confirmation of price action closing below this level. You can see last time we were below that level, it was a wick, and we did see strong buyers of the dip below that level, and we did close higher for the week. So we can't rule out the possibility that this support level might hold up and we could start bouncing from here. Obviously, we need to follow the price action and we need to wait for confirmation. But if we do start closing below the 4,300s, start expecting to see the S&P 500 going through a deeper correction. You can see right now on closing prices on the weekly chart, the SPX is down just about 9%. So we're still in that realm of a stock market correction, which is anywhere between about 10 to 15%. If we go the full 15%, that will bring us down to that leg lower at 4,000. So as you can tell, that will be another very strong support level if we do go for the full-blown 15% correction. Now, as long as we have no trend, you do want to be very cautious of more downside, and you can clearly see there is no trend for the bears or the bulls, even though in price action we are trending lower in the medium term. Now, to get more bullish on the SPX, we will need to start closing back above the 5,500s and getting back over the weekly 20 simple moving average, which is currently sitting right around 45.76. So you really can't get bullish until we see the bullish breakout, and you can't expect to see the next leg lower until we see SPX below 4,300. Now, the other thing I want to do real quick is I want to go back to the 2018 taper tantrum, and you could see we did have a very similar look, even though there the price action was trading below the 50 EMA on the weekly chart. We did get that bounce coming after that, which was about a 2-week bounce, and then we did get another 2 weeks of selling, followed by a bounce and then a full-blown capitulation. So even if we start to bounce from here, you can see that there's still the likelihood that it's just going to be a lower high, and we could still see the full-blown capitulation going into the rate hikes and going into the potential fears with a possible ongoing war. So don't rule out the possibility that if we start to bounce from here, we could still be going lower. And you could see very clearly if I zoom out here how similar these periods look. We had the prolonged selling, followed by a bounce, followed by more selling, and that's exactly what we had back here in November of 2018. So while there's no guarantee that this has to repeat exactly how we saw it in 2018, I would not rule out the possibility that we get one more weak month going into March, and then we can start to recover from there. Most times, if a correction lasts longer than 2 months, you're usually going to get the full-blown 90 days, which means we could still see the stock market correction going into March, and then we could start to recovering coming out of April. Obviously, there's no guarantees that just because it happens like that in the past that it has to happen again, but I would not rule out the possibility that the stock market remains weak through March. The only way that would not be the case is if we start closing back above 5,500 and we start getting very bullish price action from here. So we're at a very critical support level going into next week, and if we start bouncing from here and we get rejected around 4,500, don't rule out the possibility that's going to be the lower high and we're going to see more selling. So you really can't get overly bullish unless SPX can get above 4,500 and stay above that level. Now, the other thing I want to do is look at the bear bull survey, and we could see the bear bull survey is still very bearish. We have 43% of the people that are bearish and still 37.6% of the people that are neutral. So there's still plenty of cash on the sidelines and still plenty of people expecting the stock market to go lower. Typically, when you get a reading like this and it's an elevated bearish sentiment, you are going to see the stock market go higher over the next 3 to 6 months. So that doesn't rule out the possibility that March could still be a weak month. But coming out of March, we would expect to start seeing strength coming back to the market because there's just too many people going to cash and getting bearish, and eventually that cash will come back into the market. So remember, there's nothing magical about this survey, but it usually is a contrarian indication that you want to go against the trend, and that will be the case if we see the bearish sentiment continuing to go higher and higher from here. Doesn't mean we can't go lower in the short term, so don't get overly bullish just because the sentiment is bearish. But with only 19% of the people that are bullish, it is possible in the short term that we do get a bounce to reset some of the sentiment before we possibly go down for another leg lower. Jumping over to a weekly chart of the NDX, you can see the NASDAQ 100 is still trading below the weekly 50 EMA, and we now have the third week in the last 5 weeks closing below this level. So 3 weeks out of the last 5 closing below the weekly 50 EMA is continuing to show weakness in the NDX. You can see price action on the weekly chart did close just below the low that we did have back in April 2021, so we're definitely starting to take out some key levels. If we continue to go lower than 14,000, I do think the next leg lower could take us all the way down to about 13,323. From this week's close down for that next leg lower is a drop of about another 5%. And on closing prices on the NDX, we are currently down about 15.5%, so definitely in the full-blown stock market correction. If we continue to go for that next leg lower, that will be closer to a 19.5% correction, and that's getting very close to bear market territory, which is generally when you drop 20% or more from the high and then see a prolonged weak period in the market. So like I told you, it's possible we see more weakness going into March, which does mean it's possible we could see the NDX going into a bear market. So I would watch this support level right around 14,000 because that's going to be the key level that needs to hold now that we're below the weekly 50 EMA. You can see the weekly 5 EMA is also crossing below that level, and we do have negative slopes on all the moving averages, so there's plenty of weakness in the tech sector. Now to get bullish on the NDX, we need to start seeing prices getting back over 14,700 and getting back over the weekly 20 simple moving average, which is just below 15,500. And it's negatively sloping, so it will be declining each and every week. Now you can also see the NDX has been looking weak going all the way back to November of last year. So this has definitely been a prolonged period of correcting, and that could mean that we've already had our 90 days of weakness. If we measure from here, we can see that we've gone about 84 days, so we're getting very close to that 90-day mark. And usually after 90 days of a correction, if you're going back on the bull, you're going to start seeing it happening then. So like I continue to tell you, don't rule out the possibility at these strong support levels that we could start to bounce from here. And you can clearly see we did have a full-blown correction going down about 15%. So just like with the Bear Bull survey, with there being way too much bearish sentiment, I can't stress it enough that you don't want to get overly bearish at strong support. That doesn't mean we can't go lower, but I would not be trying to short the market at strong support, just assuming the market has to go lower. On the Dow Jones weekly chart, you can see that we're at very critical support because on the weekly chart, we do have a potential double top. And if we start closing below this level at 34,000 on the Dow Jones, we will see a confirmed double top, which means we could go down for a measured move lower. That takes us all the way back down to about $32,000 in the Dow Jones, which more than likely would be a prolonged bear market, which would mean the rest of the market is likely going bear as well. So you can see all of the indices are at extremely critical support levels, and on the Dow Jones we did close just below the weekly 50 EMA, and we clearly have no trend for the bears or the bulls, and the Dow Jones has been trending sideways going all the way back to basically May of last year. So this has been a very sideways market, and the next time we get a breakout, it's going to be very impulsive. So if we break down below 34,000, we're more than likely going down for a quick trip down to about 32,000. Otherwise, we're looking for the bullish breakout back above 35,400. So the next week is going to be very critical in how we behave around these support levels and where the price action goes from here. We don't have a lot of room to the downside before we're breaking through very critical support levels, so it will be favorable for the bears to break down below these support levels and try to drive the indices down for that next leg lower. The bulls need to start buying at these levels and get a bullish breakout and start sending the bears back into hibernation. And from here, I could see the stock market going in either direction because we're going to see very early in the week where the price action decides to go. If we start to get a strong bounce, that will be your bullish indication that we could be going right back into a bull market. But if we see weakness and nobody willing to buy the dip at strong support, that will be extremely bearish, and you should be expecting that next leg lower. On the Russell 2000 weekly chart, you can very clearly see it's been in a bear market going all the way back to November of last year, and we're still sitting around this very critical support range in the 1970s. If we start losing this support level, we're very likely coming all the way back down to 1700, but we will need confirmation of the breakdown by closing back down below about 1967. You could very clearly see the price action is weak and the trend is in the bearish direction, so you really can't get bullish in the Russell 2000 until we can get back over this weekly 50 EMA, which means the Russell 2000 needs to get back above about 2143. The small caps don't necessarily need to be strong for the rest of the stock market to go higher, but it would be a lot more bullish if the whole entire market starts rallying as a whole. Otherwise, you really could just see weakness in some pockets of the market, even though we're starting to see strength in others. So don't necessarily trust any bull rallies unless we see the whole entire market going in a bull rally together. Otherwise, we're more than likely just seeing more sector rotation as the market continues to weaken. On the VIX weekly chart, I want to zoom out a little bit, and you can very clearly see on the weekly chart we were forming lower highs, and we're starting to see the VIX forming some higher highs here. Now, the last high we had was back in late November of last year, and that's when the VIX was getting back into the 30s, and we haven't seen on a weekly chart the VIX close back above that level since. So even though we are seeing an elevated VIX and we're definitely getting this breakout look, we really need to see the VIX closing back above the 30s to start seeing that bear market scenario and getting that next leg lower. You could clearly see the VIX has tried to close in the 30s, but has not yet had a closing price above 30 ever since this year. Now, if the VIX starts getting above 30, I would expect to see that next leg lower, which more than likely would lead to a bear market, which could take us into the summer of this year. Now, if the VIX at any point starts closing back below 20, that will be extremely bullish and tell us that we're going right back into a bull market. But with the VIX elevated and staying above this breakout look, as long as the VIX is above about 24, you need to remain cautious, because anytime the VIX remains elevated for a prolonged period, that's telling you the stock market is getting very weak and there's a lot of fear and panic in the market, and you will not see a bull market while the VIX is trading at elevated levels. So be very cautious as long as the VIX is above 20 and continue to protect yourself to the downside, because there could be more volatility coming. On the Bitcoin weekly chart, we can see the Bitcoin bear market continues to roar on as the Bitcoin bulls cannot get a weekly close back above the 50 EMA. We're starting to get a lot of bearish momentum and the price action is very clearly bearish, not even being able to hold above the weekly 5 EMA. So the price action breaking back down below 40,000, we could be coming back down to retest these lows right around 31,700. Below that, we're going to see a prolonged bear market, which means Bitcoin could be coming all the way back down to 20,000. Now, if the Bitcoin bulls can get a closing price back above 45 to 46,000, that will be a bullish breakout and we could see a bull trend returning. But as long as Bitcoin is trading below 46,000, I think you need to respect the bear trend in the bear market, because we're more than likely seeing Bitcoin coming back down to retest a support level right around $30,000. On the ARKK ETF, we continue to see an extremely strong bear market, with ARKK breaking down to a new low and more than likely coming back down to this support level at $60. If we break below 60, we're more than likely going to start trending towards 50, and you can't get bullish until ARKK can get back above about $91. Below 91, this is just going to be a continuation of the bear market, so I would be staying away from this ETF unless it can get a strong bounce off of 60 and start getting a bullish breakout, and the very early signs that it is getting a bullish breakout will be coming back and taking out this high right around $73. There's clearly a lot going on behind the scenes and a lot wrong with this ETF, and that's why there's so many bears shorting this ETF at resistance. So remain an ARKK bear until we get a bullish breakout and continue to respect the bear market downtrend. So jumping back over the S&P 500, you can clearly see all of the indices are at very critical support levels, and we're going to learn a lot going into this next trading week. It's a short week with only 4 trading days, and we do have plenty of news that could cause volatility. So remember, it's going to be more important where we close the week. If we close the week below 4,300, you should be expecting a deeper correction, which means we more than likely could see some of the indices going into a bear market. That will likely mean we see weakness going through the end of March and possibly even longer, so you need to be very cautious while we have this elevated VIX and the possibility of a bear market right around the corner. If we see a strong bounce off this support level and we can get back above 4,500, then we can start looking at more bullish scenarios. Just remember, with the bear bull survey getting overly bearish, 3 to 6 months from now, we are likely going to be in a much better position. So don't rule out the possibility that this is a great time to be accumulating at lower prices and at strong support. If you're a long-term investor, you should have a very clear plan that's looking out long-term. And when you're looking out long-term, you always want to be accumulating during stock market corrections and bear markets. You want to buy as low as possible, so save some dry powder in case we do go down for that next leg lower. Also remember that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord, where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.